Okay, folks, welcome back. This is our weekend edition of the ICT Mentorship commentary video for December 6th, 2019. And we're looking at the dollar index. This is our daily chart from TradingView. All right, so we had a really nice sell-off this week for the dollar index. We were looking for the sell-side liquidity pool to be ran out. We've seen that. We had a retracement today. A return back into these lows was reasonable. I'm glad that we had one more drop down before we saw this, but we also are on Friday. So we had Monday, Tuesday, Wednesday, Thursday, and Friday's the only up day that we had. So there's a lot of profit taking, and obviously on the post in the forum, you can see that I included the Forex Factory economic calendar for next week. Paid particular attention to Wednesday and Thursday. Wednesday we have FOMC and the rate announcement, so dollar could be impacted there. And then we have the Parliament vote for GBP on Thursday. So Wednesday and Thursday are going to be like the big movers for next week. That's my anticipation. So be careful. Be very, very aware that the market can do exceedingly more than you're willing to expect, okay, or really surprise you, basically. There's a lot of observation on the Parliament vote as it relates to GBP because of all the Brexit business and all that. So I'll be paying attention to that as well, trying to discern what that may entail for the rest of this month. Personally, I have not abandoned the view that we're looking for the sell side liquidity pool to be ran out on dollar. So this is reasonable. It's just we had a straight down week on dollar, which is beautiful. Everything panned out with the exception of seeing it go to the sell side liquidity pool, which we don't expect to see that happen. Or rather, I should say it this way. We didn't expect to see it happen in a straight shot. Okay, it shouldn't be a straight run straight down. It's reasonable to anticipate this return back into the bodies of these candles. We're seeing that. We have a small little fair value gap in here. On the low, we come in at 81.79 on the high on this candle here. So it's about 2 pips. And we went 1 pip above, or what was it, 84? Yeah, we went 3 pips above the low here to rebalance that. Do we hold on to this, or was this just a return to run out liquidity, reload for new shorts, and then sell off for next week? That's what I'm leaning towards. I want to see that. The only thing that really changes that now is if we trade above the consequent encroachment of this SIBI, sell side imbalance, sell side imbalance, buy side inefficiency. So basically we want to say it stay, well, 98.10. We'll call it that, 98.10. It's close as I can get it by guessing. So I shouldn't say guessing, approximating. So 98.10 needs to be the line in the sand. It shouldn't need to go up there, really, to be honest with you. It should just stop where we're at on Friday's high and then resume going lower. Again, largest ranges being on Wednesday and Thursday next week. That's my anticipation, not just in dollar, but in GBP as well. Okay, so here's an hourly chart, and we whipped through and down below that sell side liquidity pool. That's what this line is here relative to the daily. And then we have come back up, clean some equal highs in here. And again, 98.10 puts us right, well, let's see, 98.10's here. So honestly, 98.10 is what I'd like to see it stay below. But if it does get some wild spiking, it could close the gap at 98.12. That would be a complete closure. I don't think it needs to do that, but if we get some kind of wild price action on the upside, that should be a reasonable cap on the dollar. Otherwise, if we blow right on through that, then we got to start considering that fair value gap on the upside, the premium array that's on the daily chart for dollar. Relative equal lows in here. We've built a nice pool of liquidity for sell side, so they could add here shorts and take some profits here and expand on that lower level sell side liquidity pool for the daily chart on dollar. Okay, so we have the daily chart of the euro dollar, and we had price run up. Let's go in a little bit more closer than that. All right, so we had Friday, Thursday, Wednesday, Tuesday, Monday. Monday, big expansion day on the upside. Buy side liquidity pool in here. Fair value gap. Didn't get a complete closure of that, but pretty much got 80% of that. If we split this range in half, okay, defined by the fair value gap that's remaining, okay, what did I have initially? It would be this to this, but we had this high here that closed in a little bit of that range. So it's been adjusted to this high and keeping this low. I want to take a look at the consequent encroachment on Friday. Let's drop down into, well, actually before I do that, we came back in. We could come down just a little bit more and rebalance this. It would be better if it didn't. If we completely go through this candle's low, we're going to be reaching for a deeper run on South liquidity pool. Relative equal lows here. May need to reclaim the bullish order block. Okay, I still feel that this is a low on euro for 2019, and that's what I'm sticking with for right now. Let's drop down into an hourly chart. Okay, so here's an hourly. Here's that fair value gap, and we're going to look at that range from here to here. Oh, you gotta let go of it, Michael. Okay, beautiful consequent encroachment. Okay, beautiful. You can't see that anywhere else. No one else does this. I have to toss that in there. I saw that on Dante's Twitter. I know who he's talking about. And I had to rub him back a little bit. So anyway, the consequent encroachment of the fair value gap, beautiful resistance reaction there, and price broke down, clearing a pool of sell side liquidity. Aggressive run in here. Let's zoom out a little too tight there. Get some detail this way. We have all the buy side in here. Small little fair value gap still remains. We went inside of that. Here's the low on this candle. So you can see we dipped into that with this wick here, and complete closures down here, and we didn't quite get down to that. So we'll see if we completely close this in on Monday or Sunday's gap opening. If we gap down there, that would be something that could happen. The reaction that we had down here all the way up to consequent encroachment, this initial one was here. Look at the bookends, if you will, effect of the PD arrays, and look how it encapsulates the major moves. And it's so precise. It's amazing how these things pan out where they are almost right to the very pip. And if they're not right at the very pip, they're like 1.5, 2 pips off, at most 3 pips. But when we work with these higher time frames, and we're looking for the context to lend a directional bias, and then looking for areas to facilitate a trade, by exposing yourself with examples, not only just what I show, but with your own personal study, you should be collecting a large volume of price action fractals that you can see these things panning out. Now, even though we focus primarily on euro and GBP, it's good for you to also get some experience collecting some from the dollar CAD pair and the Aussie dollar, and sometimes gold. So it's not just keeping our focus on these pairs when you're studying, but when we're following analysis and commentary, you really should be focusing on the euro and cable, because I'm drawing your attention to specific things. If you dilute your attention with other pairs, other asset classes, you're not going to get the same thing from the mentorship if we were just focusing on the pairs that I'm keeping your focus, or attempting to keep your focus on. I'm not trying to limit how much you can make in terms of your pips. I am trying to limit your attention to the things that are germane to our discussions and my commentary each week. All right, so we're looking for a continuation on the upside should the dollar resume. This is a nice run on sell side liquidity. This to me just looks like they're coming down, knock those individuals out, and then we can start to grind higher. It may require Tuesday into Wednesday before we start seeing it really accelerating the upside. Or I may be completely wrong and we just lost all the momentum in here and someone knows something okay, about next week and they just aggressively just wanted to reprice to let everybody know about it. And I'll talk more about that in Wednesday's review. Okay, here's the British pound versus the US dollar daily chart. Again, my focus still is residing on these relative equal highs, buy side liquidity. We have our measure move idea still. It's gotten really close to hitting that, got real close to the equal highs. Again, all week straight up, 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 up. And then Friday, we have the profit taking day going into the weekend. It's reacting off of this candle in here, the body or the close of it. The close on this candle comes in at 31.09 and the low came in today at 31.01. So we came back into the body of the candle and then bounced off of that, had a nice 35 pip or plus move from that reaction in here. We're going to look at that when we go into the lower time frame. But I really want you to focus on how this price move transpired and how I triggered all of your attention through by way of Twitter. And you can also look at the timestamp that Twitter puts on there. When I was cueing people that know what I'm talking about, pay the trader. That means take something off, pay partials. Same thing with euro dollar. When I do that, I'm drawing your attention to controlling greed, paying yourself, rewarding the trader, so that it allows you to trust the analyst side of the analysis. It doesn't mean the analyst is going to be right 100% of the time. It just means that you're giving yourself that reward that is necessary in development. Otherwise, if you take a lot of exposure and examples and practicing and you don't get the positive return that you are hoping for, it diminishes your attention, it diminishes your motivation. And this is a way of not only communicating to your subconscious that what you're doing is rewarding, but it's also fun, because many times when I say, pay the trader, we get a reaction that is either a retracement, okay, or it altogether turns around, and you can be thankful that you participated in that move and you've taken something off. You've taken a pound of flesh. Again, we're removing the necessity of being quote unquote right. Okay, it's not about being right. It's about being quote unquote profitable. And the only way we're ever going to get to be a profitable trader is if we learn to exit at a profit. And it doesn't always require us to see our ultimate take profit or target. You have to pay yourself. Okay, try to focus on controlling greed and also managing impatience. And the way you build patience and manage impatience is to do this very thing. Take partials, and it allows you to hold on to the trades a little bit longer, and you have less concern about being stopped out because the risk has been reduced. And we don't focus on, well, I put the initial risk on and I'm taking a smaller profit across. These people that say that are not consistently profitable. But as a developing trader, you need to do these things, and over time, experience will dictate when you will do it less, and you'll hold for larger portions of the price swings. But in the beginning stages, you have to submit to that process because it will yield confidence. It will build your understanding and patience, and you'll give your analysts a fair chance, if you will, to see these moves pan out. Not all of them will pan out. Not all of my trades pan out to the ultimate target or take profit. But I can take pieces out along the way. And that's all we're trying to do as a developing trader, is to force this characteristic or trait in your repertoire as far as an analyst. You need to have these things built in. So regardless if this is the high and we smash down because of whatever is the result of the parliament vote next week, or because of the dollar rate announcement, whatever, okay, whatever happens, it doesn't change the fact that we had profitability. By example, demo, paper trade, whatever you want to call it, this was a positive exercise where we saw a rough November, and then December came in like gangbusters, and there it is. We've seen a nice run, and we were able to articulate and identify periods of when we can take partials and profits, And if you didn't do that, you can at least see by the time markers on Twitter where that was in reference to the markets that I was referring to at the time when I tweeted. Still think we're going to go higher. That's my personal belief, and I'm looking for a completion of this shaded area up to that range. So basically 3260, I think it's what I came up with, if I'm not mistaken. Yeah, 3260, I think it was. So we're looking for that as a potential upside. And obviously next week's election, or parliament vote rather, that should change. It's still going to be a large volatility move, and I don't care if it goes up here and crashes down, or if it goes straight down first and then goes higher. All I'm saying is you need to prepare yourself for a very large volatility move, and there's, like I said, there's a lot of focus on that. So the Central Bank of England is going to be readily available to reprice this currency pair aggressively, one direction over the other. Right now, it looks like everything is just pointing straight up. So if they run initially into where we are looking for, these equal highs, don't be surprised if they collapse it there and run it down below these equal lows. Okay, so how far below them, I don't know, but my money would be on this equal high area being ran out first. Let's drop down into an hourly chart. All right, so we had a BISC in here. We've rebalanced. We're in equal lows here as well, and we've bounced. Buy side liquidity pool resting in here, and then we have that equal high on the daily chart. So I'm, again, looking for a continuation on the upside. Anything coming down here changes my bullish stance on cable. So it needs to come completely down in here before I would change it. So we're staying bullish pound dollar with the expectation of large expansion on Thursday with the parliament vote. All right, so that's going to be it for this week. Like I said, I will be looking at things leading up into Wednesday and Thursday, so I'll prompt you by way of the forum if there's anything that needs to change relative to what I've given here. And until I talk to you next week, enjoy your weekend, be safe, and like I said, be mindful that a calendar next week has a lot of volatility injections across the board, but Wednesday and Thursday take the cake. So we'll be waiting for those days next week to see large volatility and continuation of what we've already outlined here. All right, so I'll talk to you next week. Good luck, good trading.